Welcome. Today, we're diving into the fascinating world of FPI and FII investments in India. These terms stand for foreign portfolio investors and foreign institutional investors, and their capital flows have a significant impact on the Indian financial markets. Over the years, these investments have shaped market trends, influenced liquidity, and even affected the broader economy. In this video, we'll explore the yearly investment details, highlight key shifts, and help you understand what these numbers mean for investors and the market as a whole. Let's start by understanding the basics before we move into the data. The investment data is organized by financial year, showing inflows and outflows across four main categories: equity, debt VRR, and hybrid. Each year's total reflects the sum of these segments, giving us a comprehensive view of foreign investment activity. The figures are presented in INR crores, which helps us grasp the scale of these movements. By analyzing these categories separately, we can see where foreign investors are focusing their attention and how their strategies evolve over time. Let's begin with the early years from 1998 to 2003. During this period, FPI/FII investments were relatively modest compared to later years. Equity inflows dominated, with totals ranging from around 2,500 to nearly 30,000 crores. Debt investments were minimal or even negative in some years, indicating cautious sentiment. These foundational years set the stage for the explosive growth that would follow, as India's markets opened up and became more attractive to global investors. From 2003 to 2008, we see a significant surge in FPI/FII investments. Equity inflows soared, with 2007-08 reaching over 53,000 crores. Debt investments also increased, peaking at nearly 13,000 crores in 2007-08. This period reflects growing confidence in the Indian economy, driven by reforms, strong GDP growth, and a bullish global sentiment. The total foreign investment during these years laid the groundwork for India's emergence as a major investment destination. Global financial crisis of 2008-09 had a dramatic effect on FPI/FII flows. Equity investments turned sharply negative, with outflows of nearly 48,000 crores. Debt inflows remained positive, but couldn't offset the equity exodus. The total foreign investment for the year was a significant negative, reflecting the risk aversion and uncertainty that gripped global markets. This period highlights how interconnected India's markets are with global financial trends. Following the crisis, FPI/FII investments rebounded strongly. From 2009 to 2013, both equity and debt inflows surged. For example, 2012-13 saw equity inflows of over 140,000 crores and debt inflows above 28,000 crores. This recovery was fueled by global liquidity, policy support, and renewed investor confidence. The Indian market's resilience during this period attracted even more foreign capital, reinforcing its status as a key emerging market. Between 2013 and 2016, volatility returned to FPI/FII flows. In 2013-14, debt investments turned negative, and by 2015-16, both equity and debt saw outflows. This period was marked by global uncertainties, currency fluctuations, and changing monetary policies worldwide. Despite these challenges, the Indian market continued to attract long-term investors, though short-term flows became more unpredictable. From 2016 to 2018, FPI/FII investments stabilized, equity inflows resumed, and debt investments showed mixed trends. Notably, 2017-18 saw a significant increase in debt inflows, reaching over 119,000 crores, while equity inflows remained positive. This period reflects a renewed sense of stability and optimism, as reforms and economic growth continued to attract foreign capital. Starting in 2017-18, new categories like debt VRR, voluntary retention route, and hybrid investments appear in the data. These segments reflect evolving regulatory frameworks and innovative investment products designed to attract stable, long-term foreign capital. Though initially small, these categories have grown in importance, offering investors more options and helping diversify India's capital markets. Years 2018 to 2020 were marked by renewed volatility. Both equity and debt saw negative flows in some years, with 2018-19 and 2019-20 showing significant outflows. However, the introduction of debt VRR and hybrid investments provided some cushion, as these segments attracted positive inflows even when traditional categories struggled. This period underscores the importance of diversification in foreign investment strategies. Onset of the COVID-19 pandemic in 2020 brought unprecedented challenges. Despite initial panic, FPI/FII investments rebounded sharply in 2020-21, with equity inflows exceeding 274,000 crores. Debt remained negative, but debt VRR and hybrid categories saw strong inflows. This resilience highlights the adaptability of foreign investors and the enduring appeal of Indian markets, even in times of global crisis. In the years following the pandemic, FPI/FII flows have remained volatile. 2020-1-22 saw large equity outflows, while debt and debt VRR posted positive numbers. 2022-23 continued this trend, with negative equity and debt but positive debt VRR. These fluctuations reflect shifting global risk appetites, changing interest rates, and evolving investor strategies in a post-pandemic world. Financial year 2023-20 marked a record high in FPI/FII investments, with total inflows exceeding 339,000 crores. Equity and debt both saw strong positive numbers, while hybrid investments also contributed significantly. This surge reflects renewed global confidence in India's growth prospects and the effectiveness of policy measures to attract foreign capital. Looking at the current financial year, 2024-25, the trend of positive inflows continues. Equity and debt investments remain robust, and hybrid categories are gaining traction. While it's still early in the year, these numbers suggest sustained interest from foreign investors, driven by India's economic momentum and favorable market conditions. Over the past 2 decades, FPI/FII investments in India have evolved dramatically. From modest beginnings to record highs, these flows have mirrored global trends, domestic reforms, and investor sentiment. The diversification into new categories like debt, VRR, and hybrid shows the market's adaptability. As we look ahead, understanding these trends helps investors and policymakers navigate the ever-changing landscape of global capital flows. Thanks for joining this deep dive into FPI/FII investment details.